Hello, I'm David Mandy, President of O&M Partners New York. I want to welcome everyone to the Blackrock Gold Corp's Town Hall webinar. Really appreciate your attendance. Blackrock Gold trades on the TSX under the symbol BRC, and they also have an OTC listing under the symbol RRF. For those of you who are new to these broadcasts, O&M has really become the link between the investing public and public companies. In past times, these groups kind of passed each other's like ships in the night. But about 6 years ago, we started creating a digital roadmap that enabled us to keep up with the tremendous changes in investor demographics and particularly how they receive information. We want this broadcast to answer all of your questions. Questions may be easily answered by going to the question portal of GoToWebinar, or you can email us. Be assured all your questions will be answered. If there are any questions that are unanswered at the end of the call, we'll follow up in a timely manner. So please be patient. For those who've dialed in by phone, the only way you can hear our pre-recorded introductory presentation by David Morgan is on your computer speakers. If that's not possible, you'll be able to hear the main presentation and the Q&A in about 10 minutes, so please stay tuned. Before we turn to our host today, I'd like to introduce our special speaker, David Morgan, founder of the Morgan Report. David is a widely recognized analyst in the precious metals industry. Consults for hedge funds, high net worth investors, mining companies, bullion dealers. Last cycle, he was certainly one of the leading opinion leaders and voices in the business. He's a publisher of the Morgan Report, which is a world-class publication. It was designed to build and secure wealth for investors. He's also the author of a Silver Manifesto and a featured speaker at investment conferences worldwide. So on that note, I'm going to turn the call over to David. Thanks for joining us today, David.
Well, thanks for having me, and a little shout out to Blackrock Gold for this webinar. If you don't know, my name is David Morgan, and I am the founder of themorganreport.com if you want more information. I think, first of all, I want to start from not so much on the monetary side I just spoke about, but from the overall big picture. And the big picture is that almost everyone, not all, believe that money makes the world go round. There is that saying, that expression is used, not that often, but most people in their heart of hearts are very concerned about money. But it's really not money that makes the world go round. It's actually energy. Without energy, nothing happens. And the only reason that the world enjoys, and I know there's a lot of poverty, I know there's a lot going on, especially the last several months, so I'm aware of that. But my point is, overall, on average, the average person on the planet wouldn't enjoy the lifestyle that they have without energy being so cheap. In other words, if we had to do everything under human labor or horsepower, we would never, ever have achieved what we have in the last 100 years. There's been so much an acceleration in what's taken place on the planet in the last 100 years, and it's been primarily due to one thing, and that one thing is oil. So back to the place where I'm most comfortable, and that's the precious metals arena. Most of the time, my preference would be to be a general investor, which means what I call the American system, which is an acronym for the idea that someone has a good idea. It doesn't have to be an American. I'm just making that as a reference point. But someone has a great idea, but they don't have the capital to put the idea forth. So they gather a bunch of friends and family and say, hey, can we pull our resources together, pull our money together? I need this much money so I can devote 100% of my time to develop this and fill in the blank. So someone has a great idea, they get friends and family to agree with it, and away we go. Well, that's come to be basically the general idea of the stock market. So you can have a great idea or some type of innovation or improvement or service or whatever, and then the pool of money actually comes from the public sector primarily. Of course, the banks are involved almost always. And that idea comes to the fore or not. So I want to now just stop there and move on to the resource sector. So oil being the primary one, everything else, especially in the modern era, has to do with mineral resources. And this is all these offbeat rare earth elements that most of us can't pronounce, at least I can't. It has to do with the basics, the lead, the zinc, the copper, has to do with aluminum, has to do with iron ore, and all these things are absolutely essential for modern society. And yet, the whole sector sort of gets a bad rap. And the reason they get a bad rap is that many people are led to believe that we still mine today the same way that we did in the 1800s. And there are areas of the world that actually do mine in that manner. But the vast majority mines with modern techniques, and in most cases, every mine that is now in work usually goes back to its natural state, which means that once the mining activity has been completed, then the ground, the workings are brought back to the natural state that existed either before the mine was there, in a case of an underground mine, or in a case of taking a top off a mountain, which I don't think anyone really likes, but it happens. Without minerals, we couldn't exist. Then that's replanted or whatever. Now that again is not everywhere, but that's the general push. So the idea of what I call conscious capitalism, where we are not totally about how much profit it can be extracted. We're more cognizant of the total picture of get what we need, make a reasonable profit, and put it back to the same state where we found it, leave it better than the way we found it. That idea is more pervasive in the mining sector than most people realize. So I want to make that statement. I'm not trying to be an apologist. It probably sounds that way. I'm trying to point out the facts that most people in the sector aren't aware of, because many people will be flooding into this sector. And I want to go to the subset of the resource sector. And that's what I call the monetary metals, gold and silver. These metals really are sought in times such as we are now presented with. These are the monetary metals that are coveted in times of distress, uncertainty, monetary instability, rapid global change, high unemployment, and generally a contraction in economic activity due either to fill in the blank, pandemic, supply disruptions, war, rumors of war, uh, technological situations, labor shortages. This is when these metals truly shine. We're at a point where the metals go into leading everything else. In fact, it becomes almost the only sector that's sought after by the investing public. Right now, gold allocation on a financial perspective globally is less than 1% of all financial assets. If you go back as recently as 1968, most data points toward about a 5% weighting, which suggests that if more pension funds, money managers, brokerage houses, individual investors, sovereign wealth funds, family offices decide that gold, perhaps silver, are the place to be with a portion of their asset allocations, we could see that 1% go up perhaps fivefold. And if that were to be the case, the amount of gold available versus the amount of paper dollars seeking a safe haven is a mismatch, to put it in polite terms. In fact, it's such a mismatch that these people that sometimes are ridiculed by more of the establishment types, that this idea that gold could be in the thousands of dollars. I mean, Bank of America has already stated 3,000, but the 5,000, 10,000, 15,000 sounds to most people absurd. And in normal circumstances, that could be the case. But under the dire conditions that we find ourselves in, where there's so much uncertainty and all the problems that I outlined as possibilities that exist or will continue, absolutely will assure, in my view, and many others, that the metals are really just starting their major leg up in what I call the third phase. And this is where most of the move takes place. If you study markets, and I've made it my whole life, you will know that markets usually run in three general uptrends, and they have two corrective legs in between those three major up legs. The last one, if you look at the stock market, if you look at the housing bubble, if you look at the tech wreck, if you look at the Japanese stock market, the final leg, the final phase is when everyone wants to be involved. And this has yet to happen in the precious metals. As I just said, I'm suggesting that perhaps a five-fold increase, maybe a doubling, I don't know, the market knows, that there will be a run into gold, a run to gold that probably has not been experienced in a very, very long time. In fact, with today's technology, the internet, the availability of communication, chat rooms and social media, you could see a run to gold that absolutely goes into the record books for one reason only. Well, maybe more than one. Primarily uncertainty, something you can trust. If trust in currency starts to break down, you'll see that. So I'll circle back. I just want to really summarize what I've said. The big picture is energy. Under energy, it's vital for mining. As we like to say here in the Northwest Mining Association, that if you can't grow it, it has to be mined. And lastly, where should you look? Well, there's always opportunities in the market generally. The resource sector is probably the best opportunity from this point forward for the next few years, if not several years. And lastly, the monetary metals hold the top tier in all those for the reasons that I outlined. So most of that's my opinion. I like to use fact as much as I possibly can, but a lot of these vectors intersect at certain points and there are different opinions. One thing I'll leave you with is a top level viewpoint that's rather interesting to contemplate. And that is that the United States is about 4% of the world's population, and yet we use 25% of the world's resources. There's a mismatch there. In other words, if everyone wanted to live what I call the American dream, or what's referred to as the American dream, it'd be impossible. At the current rate of consumption and the way that we use it, you would need several planet Earths for the whole world's population to have the same lifestyle that the United States currently has. Something to contemplate. I think there's a lot of things that are going to take place this year and continue on. Not all of them are negative. Human ingenuity is incalculable, really. So I'll leave it there. Please get on our free list at themorganreport.com. I do publish a weekly perspective. And if you are so inclined to really delve into this sector, I've been writing for over 20 years on the internet with my staff. And we explore the resource sector, primarily the minerals, a little bit on the energy side. And I'll leave you to look at the sales page if you're so inclined. So again, I want to thank Blackrock Gold for inviting me to this, and hopefully these moments we spent together have been of benefit to you.
Thank you, David. David Morgan of the Morgan Report. Now we're going to turn to our hosts, management of Blackrock Gold. Very pleased to have Andrew Pollard presenting today, who's the Chief Executive Officer and Director. The first 15 years, or nearly 15 years of his career, Andrew's career, he founded the Mining Recruitment Group, which has amassed a who's who network in the mining and finance world, and helped to shape what has become some of the most prominent and successful resource companies. In a sector where management is critical, I say, some people say it's like 70% of their determination. Andrew has served as a trusted advisor to exploration and producers, ranging inside from seed rounds through over $100 billion in market capitalization. I've known Andrew for many years. He's one of the top talents in the business. We also very pleased to have Bill Held with us, who's the executive chairman. Bill has founded several public companies as well as led exploration division of some major mining companies. He's a team builder. He's a history of delivering quality economic resources. He provides strategic vision. He's a planner. And he's created programs for junior as well as senior gold producers. Most recently, he had led the acquisition, the build-out, and the startup of the Florida Canyon mine in west central Nevada. The mine achieved commercial production within 18 months of being acquired, which is almost unheard of. To date, Bill has raised approximately $300 million in project financing for properties in Argentina, Brazil, Chile, Peru, Dominican Republic, and Nevada. I always remind our generalists that in mining, the people that have success once seem to do it over and over again. And that's certainly the case with Bill Howell and Andrew Pollard. So on that note, I'm going to turn the call over to Andrew.
Thank you, David. It's good to be here. Let me bring up my screen. So, oh my goodness, there I am. Yeah, it's really good to be here. It's amazing how good people can sound when they're given the opportunity of writing their own intro. So thank you for that, David. I actually copy and pasted that directly straight from my Tinder profile. So yeah, you're welcome. Anyhow, yeah, so it's really good to be back here with all of you, simply because last time I was with you all here with O&M back in July, I think I got a call from IROC the next day asking what was up. We had too many people buying our stock, and generally the regulators don't like that. But since then, we've gone on one hell of a...
Yeah.
Well, you know, they only like it when you're losing, apparently. But yeah, they make you spell it out just why there's so much trading, and that was on the back of you. And really, I'm thankful for that, because since July, we have to have been one of the best producers. So I'm hoping that a lot of you are return guests. I'm also hoping that this is the first exposure for many of you to our story, because we're brand new in the grand scheme of things, and we're just getting started. In terms of, let me bring up my screen here. Is that coming through to you guys, just so I can get a gauge? So you know, anyhow, so you know, it's good. You know, not only is it good to follow David Mandy coming in here, but having David Morgan provide the intro is also too good to be true, because I don't have to spend too much time telling you about the silver market and why you know, we're staring down the barrel of what looks like it's going to be the mother of all secular bull markets in the precious market space and precious metal space. And, you know, we're already seeing that. I mean, I'm going to tell you about our Tonopah project today. When we signed the deal for our Tonopah project, silver was trading at about 12 bucks. It's kissed about $29 or $30 since then, making Bill and I look really, really good. One thing I'll say about Bill that David didn't mention is that he's had a hell of a career from an entrepreneurial standpoint. But you know, what really drew me to Bill, aside his rugged good looks, is the fact that he actually used to head up exploration for a major mining company called Placer Dome, and up until about 2005, Placer Dome was the mover and shaker in the Nevada gold mining space, until they were taken out for $10 billion US by Barrick Gold. So to get someone like Bill to join the company, he obviously makes my job look really easy. But we've gone on a wild ride since we've gotten going. And, you know, the best part is, as I just said, you know, the fun's just getting started. So, yeah, certainly going to be a lot of forward-looking statements happening today. You know, it was 2 months ago that I was here, and I was talking about a lot about what we've since achieved. I'm hoping that we're going to be able to keep realizing our vision, because so far we've been knocking it out of the park, and I think Bill and I have actually been a bit mesmerized at what we've been able to deliver in just a few short months. Certainly, it's been fun for shareholders. As you can see by the stock chart, you know, I think we did it right in mid-July is when I was on here last with O&M, and we were telling you about our targets. We were telling you that, you know what, one of our targets is going to be about 30 meters thick, actually 24 meters thick, and it should come out about 1 kilogram per ton. And you know what, God love you all. No one believed us. As you can see, we were happy. We were trading at like 40 cents back then. Well, guess what? Our very first drill hole into our project, we hit 30 meters of 1 kilogram per ton, and all of a sudden, it brought true every single thing we've been telling you guys so far. And the best part is, we've now put out a lot of drill results, and everything's coming back as good, if not better, than what we're talking about. Now, since July, a lot's happened. Obviously, we've become a $100 million company, but we've also changed our shareholder base significantly. The day after we put out our very first set of results, and by set of results, I mean one drill hole, we got a call from Eric Sprott, wanting to get a part of Blackrock, and he wrote a $5 million check personally. We did a $7.5 million financing. At the same time he came in, he brought in the other Sprott asset management groups as well. And honestly, we've been able to scale up quicker than you wouldn't believe. But, you know, in March, we were trading at 7 cents. So, you know, to have a major mining head of exploration running our show means that we're able to actually strike while the iron's hot. And that's exactly what we've done. So who's Blackrock? We're focused in Nevada. We have 2 projects, and the 2 things they have in common is we're after big grades and we're after big ounces. If this were Roman times, Nevada would be Rome in the gold mining market. Something like 80% of gold production in the U.S. comes out of Nevada. We happen to be on 2 of their most prolific gold belts. And if Nevada were a country, it would be the 4th or 5th largest producing gold country on the planet. So you better believe we're in the right area. Now, our prominence, our valuation, every single thing in the past few months has been driven by one of our projects. And that's by our Tonopah West project. You'll see that down at the bottom of your screen. Now, that's in the heart and soul of the Walker Lane. It's about halfway, but it's literally the halfway between Las Vegas and Reno. In fact, it's the highway goes through town if you're going to drive between the two. And in fact, you'll probably grab a bite to eat in Tonopah because there's a really good brewery there as well. Tonopah, this time 100 years ago, would have been one of the most significant precious metals mining districts in all of the United States. In fact, it's one of the reasons why Nevada to this day is known as the silver state. It's second to only the Comstock lode in terms of historic silver production in Nevada, and it's still to this day one of the largest silver districts in all of North America, certainly one of the highest grades. You know, so Tonopah was discovered in 1900, and it really only had about 2 good decades before World War I came on, and then obviously you got the Great Depression and the creation of the Fed and a whole bunch of wonky stuff. Who knows the potential that Tonopah really has, but I'm going to tell you what, we're the first group to go back in nearly 90 years and test these workings. And so far, so good. As you see, our very first drill hole into Tonopah, we drilled about 29 meters of nearly 1 kilogram per ton silver equivalent. 1 kilogram per ton over 30 meters. That's the very first drill hole to ever go into a historic working in Tonopah. And that's what these historic miners left for us. Just imagine what else we're going to find. So, you know, we're a drill, you know, as Rick Rule says, drill-driven alpha. We're at the beginning of the Lassonde curve. We're focused on adding value through discovery. And we've put out 2 sets of results so far. Both sets of results, what we've done, we've released 10 drill holes. We've hit 9 different intercepts at what most would consider mineable grades, over 300 grams per ton silver equivalent. In fact, 4 of those intercepts have been assayed at over 1 kilogram per ton silver equivalent. So we're focused on adding value through discovery. And right now, you know, Bill's been hitting these veins like a laser-guided missile. Now, we also have another project up in northern Nevada. Now, this project happens to be in the most prolific gold mining region in North America, arguably the world. You know, we're at the tip of the Carlin Trend, right where it intersects the northern Nevada Rift. And we've got 45 square kilometers, and it is virgin territory. We found 8 veins outcropping at surface just last summer in an area that no one's even put a drill hole into. Luckily, we're going to be drilling this project shortly too. Now, that said, all of our valuation in the past few months has been driven off of Tonopah. In fact, that first drill hole I told you about added over $100 million to our market cap in the course of about a week. What does that do? Well, it overshadows the other project. So what we've decided to do, and we announced it a few weeks ago, is we're going to be spinning out Silver Cloud into a brand new entity for which investors of Blackrock today will get a proportional representation in this new company. And what does that allow? It allows 2 things. One, it creates a separate vehicle amidst the $1,900 gold backdrop for us to play with. And we've shown we can add value. You know, Bill and I both joined the company at roughly the same time. I joined in May of 2019. He joined a week later. The stock was $1.2 million market cap and trading at 3 cents if someone was feeling risky enough to even put up a bid. Since then, we've hit a high of $1.61 on the back of I don't know how many hundreds of millions of shares traded. But what this allows us to do is create a new vehicle with Silver Cloud being the flagship asset, which it was when Bill and I joined. It's the reason why both of us joined the company. And really, it signifies that Blackrock Gold as an entity is dead set. We've got a monster by the tail at Tonopah, and we're not taking our foot off the gas pedal. We're going to build out Blackrock to focus just on building out this Walker Lane district. And honestly, the way we've been drilling, I don't know the potential, but I can tell you the Walker Lane district is one of the most prolific gold belts in North America, and Tonopah is the center. In fact, there's a project directly adjacent that adjoins their property that just got their federal permits the other day, which is development ready. It looks like we could turn Tonopah into a serious mining complex. So effectively, the spin out will, there's a big rigmarole in terms of what you have to do to get there. And what we're thinking is for every 3 shares in Blackrock that investors own, they'll get 1 share in the newco. Obviously, coming out of the gates, this newco will be tightly held, but you're going to have some serious firepower behind it, including Eric Splott as one of your lead investors, and Bill and I still calling some of the shots there. So that's going to be exciting. But let's get to the main event here. Welcome to the Silver State. Nevada is known as the Silver State. For many of you that have had the chance to get down there and spend some time on the highways, that's the sign you're going to see. Now, it's known as the Silver State for 2 different deposits. One is the Comstock Lode, also on the Walker Lane belt, about a 2-hour drive from us. And the other is Tonopah, which is the 2nd largest silver district in all of Nevada. This was the last district scale discovery made in Nevada before World War I, and it brought the who's who. It brought all sorts of characters through. In fact, Wyatt Earp ran a bar on her property at one point. Now, Tonopah itself produced about 174 million ounces of silver, nearly 2 million ounces of gold, but it was really cut short. We don't know what the potential is because really silver prices took a huge turn in the mid-1920s. We're going to find out the potential. In fact, that's what we're doing right now. We're the first group in about 90 years to go back in, consolidate this district, and drill right back into these historic underground mines. And so far, we've been hitting really at exceptional rates. So the district itself was discovered in 1900 by a prospector and his mule. That's Jim Butler there. The story goes, and this would have been just the middle of nowhere back in those times. He was walking, his mule ran off. He chased it in the middle of the night. He tripped over a outcropping vein, and Tonopah, one of the richest silver discoveries known to man, was born. Now, the city of Tonopah emerged right after that. In fact, it brought everyone and their son in here. This is frontier-style gold rush stuff. I mean, this is the Wild West. And Tonopah, to this day, still looks like one of those historic mining towns. In fact, so historic that there's a mining museum on our property. You know, it's amazing that Tonopah, literally halfway between Vegas and Reno, we're about 20 miles away from Kinross's Round Mountain, which has produced, I believe, 15 million ounces of gold. This is where everyone stays, the mining engineers, the geologists. No one to this day, until we got here, had put a drill hole into the historic workings. We just did. We realized that things didn't shut down because they ran out of ore. They shut down because of the market. What's the market? Well, this is it. I wish I paid more attention in history class in grade 12 because knowing that I could have made some money off of it now makes it that much more compelling. But here you go. 1900, Tonopah was discovered. That red bar chart there represents the production. They started producing right away. As you'll see, it's a hockey stick chart up. The veins were discovered on the east side of town. It's an east-west trending set of veins. This is a low sulfidation epithermal system that we're on. So we're talking about ultra-high grade veins, and they run east to west. While they discovered the veins on the east side of town, they actually built the town there to service all of the workers. And then what happened is over the years, as they mined out all the deposits on the east, all these new big mining companies started staking claims to the west, and they followed it. So the west represents the blue sky. The west represents where the last production of the district took place. And in fact, the West, you can see it on the story here, from 1900 to about 1910, all of that production that you're seeing, that hockey stick chart up, that was from the east side of town. Then in the 1910s, production, as the east side of town got mined out, production started moving westward. Around 1917, obviously World War I, big competition for people. It sucked everyone out of the mines, and they went to go fight the wars. Obviously sent costs up too. Now in 1923, that was the real inflection point, the nail in the coffin for the district, as they say. The price of silver went from $1 an ounce down to 65 cents an ounce the next year. Within a few years, it went to 35 cents an ounce, effectively the nail in the coffin right as the U.S. was having to deal with the onset of the Great Depression. It killed it. Now, here's where the opportunity strikes in. You see where silver prices tanked and production tanked. It wasn't because of anything to do with the mining district. It was to do with metals prices. No one since the 1930s has had our parcel of claims and drilled into them. We now are the largest player in the district. We control more than half of it. And this district, here's a newspaper clipping from the early 1900s. It says Tonopah is one of the most significant mining districts in all of the U.S. Now, we control quite a few of these companies that they outline here in terms of their properties. So when we say we've got one property, we don't. We've got a consolidation of multiple publicly traded mining companies all rolled into one. It would be the same as me saying we control half of the Golden Triangle or half of Red Lake. It's a small district. It's about 4 miles long, east to west. We control all of the western half. Once again, the story is they mined out the eastern half and everything moved west. Well, we got the western half, and production got cut short there because of the low metals prices that started. So what you'll see on here, this is more of a real estate consolidation than it is an exploration prowess sort of endeavor. And I'm not taking anything away from Bill. This is going to be his legacy, I think, moving forward. But here's what we have. We've got all of these parcels brought together. We're by far the largest claim holder in this district. There is a group next to us that holds the eastern part of the district, and you'll see the eastern part of the district has a town on top of it. We have the best of both worlds. In the background there with the U.S. flag, that's the drill rig set up. In terms of infrastructure, you'd be hard-pressed to find many groups out there with something better than us. Not only do we have food, you see the power lines, hotel, we've got a casino in walking distance. As you'll see, there's our drill rig set up at the site of our very first drill hole from the Victor target. We got a Subway, we've got a Food Mart, and we've got a Comfort Inn. What more could you want? So this is the story of our project. We've really taken what you'll see with those black notations on the screen. Those are all historic mine shafts on our property. We've distilled that into 4 different key target locations. Now, what we're thinking in terms of upside is, well, we think we've got more remaining underground than they were ever able to pull up in the 20 good years they had this district. We think we've got between 2.5 to 6 million tons, somewhere between 1 to 2 kilograms per ton silver equivalent. Now, you're not going to find a district like this anywhere else unless you're going down to Sinaloa, state of Mexico, which you've handily speaking have cartels named after, or you go up to the Yukon or Alaska where you have to helicopter stuff in. As I said, this is halfway between Vegas and Reno. There's a Subway within walking distance, the sandwich shop. And you got literally, you'll see the highway going across the screen here. Now we're drilling. This was the maiden drill program that never stops. Originally, we set out to do about 7,000 meters. That's been expanded to about 25,000 meters now because of success. And in speaking with Bill right before the call, it looks like we're probably going to have about 30,000 meters completed before the end of the year. We've now got 3 drills at site. Started with 1. We've got, so 2 of those drills are RC. One of those RC drills is living at our second target. It's called DPB. It's what we refer to in shorthand, Denver, Paymaster, and Bermuda. The core rig is living at Victor. That's the site of our 30-meter hit where we hit about 1 kilogram per ton. in addition to 2 other smaller 3-meter zones, one of which is to this day the highest grade delivered on a property. And then the third RC drill rig is working at the Ohio target right now, target number 4, and that's one that was a third pass producing mine on our property, which we're hoping to make a new discovery on. So far on 2 sets of results, we've announced 2 different discoveries at 2 historic mines. So you'll see that Victor and Ohio are actually very close in proximity to each other. We haven't drilled Ohio yet, but we sure as hell have drilled Victor. These are both operated as single mines by 2 different mining companies. Victor was operated by the Tonopah Extension Mining Company. The lead shareholder in that was Charles Schwab. In fact, he personally financed and backstopped the mill on our property. It burned down in the 1940s, I think, which coincided. I mean, that was the district was already dead and done by that point, and obviously World War II didn't help. But the Ohio vein, which looks like an extension of what they were mining at Victor, was run by a different company. Now we're going to be drilling Ohio, and we're going to be trying to connect the 2. But Ohio is one of the most prolific producers in the district. It was high grade and it was thick, but it wasn't as thick as Victor. And we told the market last time I was on here that when they stopped mining at Victor at the 1880 foot level, where they encountered water, that where they stopped off, all the records indicated that the vein was going to be 24 meters thick. Well, drill hole number 1 hit 29 meters of about 965 grams per ton silver equivalent. Now, back in those days, this was in the era of donkeys and pickaxes. They didn't do any drilling back then. They were mining these veins straight from surface. They were doing drifts and crosscuts. Unless it was right in front of them, they didn't know the veins existed. In fact, actually, that's how the Ohio vein was discovered by this other mining company previously. It was just through happenstance. By the first group to drill into this target, we actually encountered 2 other vein zones, one of which is the highest grade connection at our project so far, where we hit 3,600 grams silver. It had 18 grams gold, about 1,800 grams silver in that. And this was a new discovery, something that the historic miners who had been mining the Victor target never knew. Now, we've been drilling the Victor target ever since we had this great connection. We tried to hit it with the RC rig again, but at these depths, you know, we're going well below 2,000 feet vertically. The RC rig has a lot of deviation, so that's why we brought the core rig in. And we haven't released the core assays yet, but what we're targeting is about 300 meters down plunge of strike. So picture this, we've got assays pending that will confirm or deny something that's going to be about 20 to 30 meters thick, about 1 kilogram per ton, and 300 meters out. Those assays are still forthcoming. I can't wait to get them, but imagine just what we can do with a vein that's 30 meters thick. Now, more significantly is our second discovery, which we made. Now, this is about 1 mile to the west of where the Victor hole was, which really was a shot of epinephrine, the heart of the market. But I'll tell you what got the corporates more excited. The corporate mining companies were more excited about our second discovery. That's DPB. This was mined by the same company that had Victor back then. When they encountered water at Victor and were sending away to have water pumps commissioned and diesel generators, they went to go mine this set of veins. Now, why is this more significant? It's because you've got a whole swarm of veins all running in parallel to each other, all grades that are off the charts. They make Einstein blush. Now, what we've been drilling into this, we've encountered on our second discovery, we've released 10 drill holes. We've hit 5 different vein zones. Some of those, multiple of those were over 1 kilogram per ton. We just pointed the drills right where they stopped mining. We had a good idea that when they stopped mining, this was the last producing mine in the district when things shut down due to low metals prices. And they'd actually stamped out a whole bunch more, I guess, zones that they were doing development work on. They said that they were getting prepared to mine this, but they never got around to doing it because silver prices tanked so much. This is the most exciting target on our property for 2 reasons. One, obviously, we connected as modeled, as predicted that we would, showing that historic miners didn't, in fact, shut down because the veins weren't there. They shut down at low metals prices, but because the step-out potential on this is glorious. I mean, we're testing on this next round of drill results, which are starting to burn a hole in my pocket, we're testing up to 800 meters of strike in one direction. We've probably got a whole bunch of strike in the other. It's open in both directions, and then of course up dip and down dip. This one target will probably represent the plurality of ounces on here for it, probably 40 to 50% of the whole ounces. So this is the one to watch. Victor's the one that's the easiest target to explain, simply because anything 30 meters thick, the market will like. Now I'm just going to touch on Silver Cloud because we're going to be drilling this very, very shortly in a matter of weeks. In fact, one of the drill rigs from our property is going right up to Silver Cloud in the next few weeks after it's done drilling Ohio target, which I'm hoping they'll bring a third historic mine back to life. But Silver Cloud, 45 square kilometers on the most productive gold mining region in North America. Now we're about 15 kilometers away from the largest gold mine in North America called Goldstrike, but we're really, which is at the top of the Carlin Trend, but we're really a Northern Nevada Rift style project. You'll see the Hollister mine right next door to us. I saw a mining.com article from a few years ago when Hollister was producing. It said that Hollister was the #2 highest grade gold mine on the planet that year. Those veins point directly at us. In fact, they were mined right up to our property boundary. We're testing a concept that is seeing if we have the western extension of Hollister. And why do we think that? Well, if you're a geologist and you go to Silver Cloud, just given how active the region is, it's like going to Disneyland. You've got multiple mercury mines on the property. It's covered in silica and sinter. There's stuff going on at surface, but more importantly, there's clearly a lot going on with it. So here is a satellite image of Silver Cloud. You'll see the Goldstrike deposit that's crawling distance from us, but right next door to us is the Hollister deposit. As I said, those veins go east-west. They were mined right up to our property boundary. And in fact, on our side of the property just last summer, and this is an area that has never before been drilled, they have 8 veins outcropping at surface and a mercury mine. Why the mercury? Why is that interesting? Well, because that's the mother of all pathfinder elements when it comes to low sulfidation epithermal targets. Now the Midas mine up to the northwest there, one of the largest gold mines certainly the highest grade gold mines in Nevada. Now interesting about that is that Midas, the veins point directly at the western extent of our property. In fact, we see a lot of similarities between both Hollister and Midas. The western half of our property is cut by this big graben structure. We call the graben structure the Silver Cloud graben. We have reason to believe it's actually an extension of the Midas graben. That's where all of their high-grade ore chutes are located, and it looks like we've got the same structural architecture there. But even more interesting is the fact that we've got this northeast veins target, which looks nearly identical to what they've been mining at Hollister for a long time there. The average head grade at Hollister, they produced 400,000 ounces at 34 grams per ton. At Midas, they were producing, that's a 3 million ounce discovery, I believe, and they were producing at about 30 grams per ton. All roads lead to Rome once again, and it looks like Silver Cloud could be Rome from a structural point of view. So we've got 3,500 meter program, 14 drill holes. Most of those are focused at the northeast veins target. That's kicking off in a few weeks. If we can find the western extension of Hollister, this story just got a whole lot better. But I'm going to tell you what, for now, all of our value is based on Tonopah, which is one of the reasons why we're planning to spin out Silver Cloud. But at Tonopah, so far, we've been fishing with dynamite. 10 drill holes released. We've hit 9 intercepts above 300 grams per ton silver equivalent, and 4 of those are over a kilogram. What does that mean? It means that now not only have we established that the veins are there, which the market liked, now we start focusing on expanding the footprint of mineralization. This is the fun part. You know, if we're able to hit anything like the grades we've been able to hit over a decent strike length, certainly in that DPB target where there's a cluster of veins all traveling together as one, which they were mined as one 100 years ago. This is the exciting part. So our next set of results, our first ones are fun, but this is where I think the project takes on a life of its own. So with that, I'm going to hand it over to Bill, who's going to give you some more insights. Bill, you there?
Yeah. Okay.
Here we come.
Control here of the.
Here's Bill.
Okay, so what I'm going to do, I'm going to take you through a little bit of the Tonopah West model and what we're targeting. As you can see on your screen here, this is Leapfrog, and what we're looking at here is the outline of the property boundary over satellite image. You can see the town of Tonopah here. This is a deposit called Three Hills, which is open pit, low-grade open pit type target. And anyway, you can see we're on the west end of the project area. Go over here to the Victor target, which is right here. There is the gas station you saw in the Comfort Inn. Just turn off this topography so we can see through it. What we've been able to do is take the underground workings and go through the old mine maps and digitize them. As I've said in the past, we haven't really, we're not really starting with a clean sheet of paper. We have a lot of information from the old timers from the underground workings. So this is geology at the 1880 level. And what we can see here is they were mining this very thick vein called the Victor vein. And it was about 80 feet or roughly 24 meters wide here. And based on what we see in the geology, we've been able to put together a little bit of a model which controlling the mineralization in the area. First thing that we see on the various levels is this big west-northwest oriented fault. That seems to be controlling the mineralization in that northwest direction. And then we have this contact between what's called the west end rhyolite on the hanging wall and the extension breccia on the footwall. And if we take a look at that in section here. So here we are looking at to the west. We can see that contact here. This is that northwest fault. This is hole 1. That's the 29 meters of a kilo of silver sits right here. And these are our core holes coming back testing this contact zone. So that's what we're working on in the Victor area. Just to go back and then look at over here at what we call Paymaster. It's quite interesting drilling. This is the cemetery here. We're across the street. As Andrew mentioned, it's roughly a little more than a half mile away from the Victor area. But what we can see is we have to drill. Obviously, we have to drill around the cemetery. So that causes some challenges.
We're saving that for Halloween.
Yeah. What we see is same kind of structural. We have these veins coming through. We're intersecting. This is our hole 6. This was 4.5 meters of a little over 2 kilograms of silver equivalent. And what we're doing is we're filling in now with some angled holes, kind of making a fan of holes, if you will, so we can follow these veins up and down dip, and then look for additional veins out to the south, and if there's anything in between to the north. So that's the work that's going on there. Again, we'll go back out and we'll look at the Ohio area. Here we're looking for those flat veins of the Ohio and the west end vein. We've finished one hole in the area, which is at this site A. Sorry, let's see. Oops. Yeah, okay, so there's our hole that we finished. What we're following up is when you look at the veins in the area, you can see this is the Victor area over here. those veins, they start to roll over on themselves. Oops. There we go. They start to roll over and they form this arch. And so these are the flat portions of the veins to the south. This is what our drill hole is targeting. We're looking for the offset portion of those Ohio veins to the west. As I mentioned, we really didn't start with a clean piece of paper. Let's see. Hopefully, is that coming through? Can you see the state of Nevada?
Can't.
Not yet. We're still looking at Leapfrog.
Maybe try your screen. Turn your screen share off and then turn it on to the new one. Maybe. Yeah.
Okay. It's not letting me change. Ah, there we go. Okay. Now you should see the state of Nevada.
Not.
So
Here we
there
go.
we go.
Tonopah is down here. It's one of the largest silver producers after the Comstock. I tell people between the Comstock and Tonopah, in today's terms, if you look at things like inflation, but also GDP and whatnot, those two deposits were probably worth somewhere in the order of 600 to 800 billion dollars worth of wealth creation. If I told you, or if I went to Silicon Valley and I told people that if you could design an app that could find $600 or $800 billion, you can guarantee that people would be driving their scooters and their Teslas over the Donner Pass to come to Nevada and try to test out that app. So quite a large amount of wealth was created in those two deposits.
And it got cut short too early.
This is a section through the Victor area. As I said, we're not starting with a clean sheet of paper. The yellow is that extension breccia, and the brown units are the west end rhyolite. So those veins straddle that contact, and we're testing down here, down dip, trying to find the extension of those areas. Again, here you can see a plan map of the workings. Again, just showing that we have lots of information that we're starting with. This is out in the Denver and the Paymaster area. This was based on a cross section from 1940, and what you see here is the Denver, the Paymaster, and the Bermuda veins, and also the Merton vein. This is turning into be something quite interesting. This Merton vein, starting to see some interesting things happen to it down in this area here. So stay tuned for that. One of the things, obviously with all the regulations that have come through since the 1940s, you wouldn't be able to write these kind of terms on a cross section anymore. So, but it's quite interesting how the miners at the time felt that there was something good going on in here. We have assays from the various levels. So you can see here, this is from the Denver vein, but some fairly good assays along the Denver vein. So that's another one of the targeted areas.
So these are all stuff that they never got around to mining, correct? The DPB, where they're stocking out what they call proven and probable ore, they never got to mining that, correct?
Yeah, so there's workings out to them, but there was never any development, i.e. there was never any sub-levels put in for stoping. They were just out there. The company had some issues back in the mid to late 20s with paying for some diesel pumps they ordered. So there was never any mining out here, and you can see that in this block section here. You can see the workings are out here, but there's no real development like you see back in this area.
So they've laid that out as low-hanging fruit, and we're just going to pick it right up, and that's what we've been doing so far, correct?
That's right. Just a little bit, the main ore units are down in here. So Those are the things we're looking at. In the core drilling, what's kind of interesting is we're the first ones to see the west end rhyolite and the extension breccia in the last 90 years. Those units don't outcrop; they're only in the underground working. So the core drill has penetrated these units, and we're the first to look at them again in 90 years. It's really interesting about where the Victor vein and DPB are is the fact that that land was held by a family. So a lot of the work that was done post 1930 in the district, those lands never saw any work at all because that family held on to it until recently, about 3 years ago, when the last person in that family passed away, and he deeded the land to some associates who didn't really have the same attachment as he had, so they were able to formalize a deal and sell that parcel of land. This is just looking at the targets again. So as I said, this area on the whole northern end of the project has never been looked at since about the 1930s with respect to the veins. So it's quite exciting to be working on it in that we're the first to see a lot of these rocks again in the district. And that's just a picture of what the ore looks like. It's a classic banded low sulfidation epithermal system, has high silver and gold. The silver gold ratio here is about 100 to 1, so it's pretty close to what you see the silver gold price is. So it's about a 50-50 split in revenue if you look at it that way. And that's all I have.
Well presented, Bill. Really well done. Thank you.
No one knows the potential of this district had World War I and the Great Depression not absolutely killed it, right? I mean, in about 2 decades, it produced nearly 200 million ounces of silver and 2 million ounces of gold from a very, very small amount of land. I mean, we're talking about, 4 miles east to, it's actually 4 kilometers east to west, but because the grades are so high and the veins are so thick, it was able to establish itself in those 2 decades as one of the most significant silver districts in all of North America to this day. Now, it was cut short. I mean, if it wasn't cut short, no one knows the potential, but that's what we're finding out right now, and that's what I guess investors are betting on. So far, we've been hitting it like a laser-guided missile, as I said. The grades are off the chart. The thickness, I mean, once again, anytime we're reporting assays in kilograms per ton for precious metals, and you're reporting them in meters, not feet, I mean, we're in good standing. So this next set of results, which we haven't released any for the last month or so, that's going to be focused not on establishing whether our model is correct. It's going to be focused on expansion. How big are these step outs? And I mean, we've been trying. Our second set of drilling at Denver Paymaster in Bermuda was an 800-meter step out. We're doing some Hail Marys here, but if we connect on something that's 800 meters and multiple veins at those grades that we've been hitting, my goodness, this is the next Silvercrest. So with that, I'll turn it over for questions.
Thank you, Andrew. Thank you. Well, let's start with Dave Kranzler. Great to have Dave on the line with us today. Just unmuting.
Hi, can you hear me?
We can indeed. It's welcome.
Thank you. I'm just curious if Tonopah is what you guys think it might be, how did the majors that operate nearby miss this thing? I mean, based on just some quick calculations I ran on Ohio and let's see, Victor in Ohio. I mean, it looks like those 2 veins, if you achieve just the low side of your goals, you're looking at over 100 million ounces of Juanicipio grade. How did the majors miss that?
Correct. I like to look at the the resources Silvercrest has, because they've got about 137 million ounce resource at about 700 grams per ton silver equivalent, and they're at about $1 billion. Sorry, $1.4 billion market cap Canadian, and these are two targets which aren't even my favorites. My favorite target is DPB, the second target, but how did they miss it? It's because this is the first time in about 100 years these claims have come available. These are patented claims. So back in 1900, when the district was discovered, everyone and their son came here and started staking claims. Yes, you had a lot of big publicly traded mining companies setting up shop and operating mines here. I don't know how many, but it was certainly over a dozen that were all working in the area. And then there was lots of consolidation that happened. When everything went belly up due to low metals prices, these claims were picked up out of bankruptcy many times, and they've been held in the same family trust for about 90 years. The day we signed our property, I mean, as I said sort of in my presentation, was this is more of a real estate consolidation play than it is exploration prowess. I mean, this isn't grassroots stuff we're doing. This is mine expansion drilling. I mean, we're literally just pointing our drills where production shut off, and then we're extrapolating how big it could be. And that's what our next set of drilling is. But really the secret sauce behind all of this is the fact that we were able to get the claims in the first place. The day we signed our deal to get the property was the day that 3 different packages of claims came together for the first time in history. And one of those packages, which represents Victor and DPB, that was the first time any mining company, any real mining company has come in to look at the underground component. Up until now, the people that had the rights to these patented claims were only looking at what was at surface, the surface rights, meaning the historic mine dumps, the crushed rock that, you know, maybe there's a metallurgical value or not. We're the first group in 100 years to get this. And I'll tell you what, it's David versus Goliath, because I'm aware of, after we signed our deal, many major and mid-tier mining companies came to us and said, how the hell did you get your hands on this? They've been looking at it for months. And that was because bureaucracy and administration. And Bill showed this to me in January of this year. I said, you're crazy. If this is too good to be true, I don't believe it. I trusted him. We signed the deal probably 2 days later. And then everyone else was dumbfounded. I don't know how many groups have come to us saying they've looked at this and saying what level of bureaucracy they were passing this, the food chain to, but it's ours now. And, we will have 100% ownership of this in 3 years for about $3 million US, which is obscene. So yeah. And as I said, the day we signed this deal, silver was a backwater investment. Go back to February, silver was at about $12. The silver gold ratio was 128 to 1. It ain't 128 to 1 anymore. We timed this thing perfectly. And the best part is we're hitting it unbelievably well. So, we've proven our concept that they didn't stop mining because the mines run out of ore. Victor, all we did was we targeted right at the last historic workings, right where they left off. We hit 30 meters, and this was right in front of their face. Just imagine what they left. You go to DPB, we've hit multiple, plus kilogram intercepts right where they left off. We're proving our concept. And, once again, this district produced a lot of gold and silver from a little bit of rock. Who knows? I don't know if this is bigger than Comstock, but I can tell you that Comstock was discovered in the 1860s, and they mined themselves out back in those days. We didn't. Tonopah didn't get the chance to mine itself out. It was cut short. We finally got our hands on it again.
Thanks, Andrew. Dave, does that help you, or do you want to follow that up?
No, that helps a lot. And I understand how, the big companies would have overlooked it via their bureaucracy. Just one more quick question. Assuming this thing gets to the point where it converts into a mine, is any of it amenable to start off with open pit, or is this just going to be pure underground?
It's where we're looking at high margin underground mines. That's sort of what we're targeting. Easier to permit. Sure, there's it's a small district, so there's obviously we're going to be drilling the crap out of this thing for the next year. Look at what great people say how quick you're going to come out with a resource for all this. Great Bear made their discovery 2 years ago, and they've just been having so much fun drilling. That's what we're going to do. Is there one mine on this property? I hope not. I hope there's multiple, because we're drilling into 3 different historic mines. In fact, we're drilling into way more than that. If you saw one of my first slides where I'm showing the area, you saw all those black notations. Those are historic shafts. We've consolidated them into sort of 4 different target areas. Victor and Ohio could be brought together if we connect the 2, which it's the same veins that sort of run through them. Yeah, this is going to be ultra high margin, ultra high grade stuff, and it's not in Sinaloa, it's not in Peru, it's not in Bolivia, it's not in Alaska. This is honestly the funnest. I can't wait start doing site visits again, and flying people into Vegas and renting a bus for the day. It's a nice tour. There's a mining museum right next door to our property. It's too good to be true.
Great, thank you.
Thanks, Dave. Doug Loud. Doug, question today? Unmuting takes a moment. That's all. Okay, let's move to
Sorry, the little box for unmuting disappeared. This is really very exciting and very interesting. With all this drilling and all, do you have enough money for all the drilling, and do you have enough permits, and what permit issues do you have down the road?
The best part about our land, and it's the best part for many reasons. One of the reasons why that no one's ever drilled into these things is that these are privately owned claims. The government doesn't control it. That's also the reason why it hasn't been drilled, is these have been passed down generationally since the 1930s. We don't need permission to drill. We made our targets, and we go in on about 24 hours notice. The nice thing about our package is that there's not houses and there's not businesses on top of us, which is the eastern half of the district. The western half, that's really undeveloped stuff. So, we're actually, from a community relations standpoint, I mean, everyone's so happy that we're there. In fact, we sponsored the Stampede they had this year there, and they're excited to see what we can do with the project, because this is the first time in 90 years that people have been coming and looking at this. We do have some protocol from an environmental standpoint to follow. A lot of that just involves remediating the drill sites that we do, and that's just where we build drill pads with mud and dirt, and then we want to take off the disturbance again. But so far we've got no issues from that, and from a regulatory standpoint, I mean, we're good. Bill, maybe you want to say something to this too, or?
Yeah. So Doug, how you doing? So
Pretty well. Glad to see you.
Yeah, we can disturb up to 5 acres with no permitting. And the way we stay under 5 acres is we can do concurrent reclamation on the sites. And then once we get over 5 acres, it's a matter of going to the state and getting that permit. As Andrew said, the government's not really involved other than state government. So we don't foresee any problems. The state's pretty pro-mining. So we're able to keep going and get that, say, greater than 5 acre permit when it's needed.
So down the road, you need more permits, but you're good for now. Do you have enough money? Enough cash?
You never have enough money, Doug.
Well, so in June of this year, we raised $4.5 million at 20 cents. And then right after we hit hole 1 in July, we raised another $7.5 million. It was unsolicited. It was from Eric Sprott and Sprott Asset Management. So yeah, we're good through the end of the year. We're in a position where we don't have to do anything in terms of financing. We get to anytime a stock goes from 7 cents, which we were trading in March, to a high of $1.60. I know since July we've traded about 50 million shares. So new wealth created. This means that every single one of your warrants are in the money. And in fact, that June financing we just did came pre-trading this morning. And we've been doing pretty good so far. So what this means is should every warrant come in the door that's out there, and there's quite a bit, it's going to bring in another $12 million, meaning we're sitting pretty in terms of drilling. We started just with a 7,500 meter maiden drill program outlined with 1 drill. We've now got 3 drills at the site. We're probably going to do 30,000 meters worth of drilling by the end of the year. And the best part is, I mean, we've only released 10 holes, but so far so good. I mean, it's once again, you guys are probably sitting in the same position I was in January of this year when Bill came to me with his model, and he said that, yo, no one's put a drill hole into this thing. What we've done since our last presentation of the O&M is we've confirmed our concept. This isn't too good to be true. This is reality, and we're stepping into it.
So are you threatening to release some more drill results?
You better believe it. The last set of drill results were on September 1st. So we've had 2 rigs at the site up until about last week, and now I've got a 3rd. We're probably going to start releasing by target. So either it's going to be we don't have much back from the Corp program yet, but from the RC program at Denver Paymaster in Bermuda, where we stepped out 800 meters, and we've been doing a lot of infill drilling from there, and we've also got the other direction to follow up on too. Those are probably going to be the next set, and once again, we've established where the veins are. You know, everyone knows the grades we're hitting already. Now is the fun part. This next set of results will start showing volume. It's going to start showing ounce potential.
That's
now,
great.
It's not going to take much at the thickness we're doing and the grades we're doing to once again, you know, I'm not speaking out of school when I compare us to Silvercrest, because go look at what they've got. They're a similar story 2 years ago. They have a hell of a geologist. Well, so do we. They picked up a historic mining district in Mexico. Their average grade is 700 grams per ton silver. They've got an inferred resource of about 137 million ounces. We're targeting much more. Our grades have been better. They're $1.4 billion market cap. This is the beginning. It's not the end, my friends.
Thank you, Doug.
Thank you very much.
Thank you, Doug. We'll turn to Heinz Thoma. Heinz?
Unmute.
Coming. Here he is.
Great presentation, great story. All my questions were just answered in the last segment. Thank you very much.
Thank
Mr.
you.
Zhao, we've got next. Turn right on. Victor? Here he is.
Yeah.
We can hear you. Yep.
Okay. So when, how long will the drilling last? You plan for this property?
Say that again. Sorry.
I mean, what's the end drilling this year, this season?
This season.
So, you know, the best thing about this is, you know, we're not in the Golden Triangle. We're not in Alaska. We're not in a far-flung jurisdiction. You can drill 12 months of the year here. In fact, you know, Bill can go and get a toasted Subway sandwich or a piece of pizza if he wants, and it's still going to be hot by the time he gets to the rig. There is no stop to the season here. It's only getting bigger and bigger as we add more drill rigs to the property. Once again, we started thinking we're just going to do 7,500 meters with one rig. We're at 3 rigs now. Heaven forbid we keep hitting. I mean, if we, so we've got this 3rd drill rig at this Ohio target, which only just started last week. Heaven forbid we make a new discovery there and bring a 3rd historic mine back to life, because yeah, it's not going to stop. I mean, we've got our hands full. Our biggest issue is that geologists are, because the market's come back so big, geologists are in such high demand. We're understaffed. Bill's, working certainly harder than I am, and he's, but it's one of those things where, we're trying to scale this thing, and you got a major mining head of exploration running the show here. 3 rigs is nothing for Bill. Back when he was with Placer Dome, 3rd largest gold company on the planet at the time. I think at one project he had 32 rigs in operation. Now, he obviously had a much bigger staff underneath him. We're trying to hire that. But yeah, we can scale this thing up, but there's not going to be any shortage of news flow anytime soon, unlike Golden Triangle or other places.
Thank you, Victor, for your questions. We're going to turn to Murray Vanderbilt. Murray, good to have you on the call. Always welcome your questions. We're unmuting you.
Maybe we'll come back to Murray in just a minute.
Okay, that'll be fine. Michael Potter, is Michael unmuted? There's Michael. Hi, Michael.
Hi. Great to talk to you. Thanks very much for a very fascinating talk. If I may, I'd like to come back to that first hole, that thick intersection. How long was the strike and the sort of vertical interval of that material, which was mined in the past before the mining stopped? My reason for asking is because if I remember rightly, at Comstock, there was a very high grade blow, which wasn't very big, but an awful lot of metal come out of it.
Bill, I'll hand this over to you.
Yeah, okay. So the amount that was mined had a strike length of about 700 feet or 200 meters, and was roughly 20 meters thick, and came down from the 1200 level down to the 1800 level. So what is that, 600 feet? So another 200 meters. We feel that based on those calculations that you saw with regard to the target, that we can have a zone that's still has a strike of 200 meters and 20 meters wide and 100 meters long.
Okay, and are you seeing any variation in the mineralogy over the vertical thickness, or is it all pretty much the same?
The district is quite interesting because the whole district has a 100-to-1 silver to gold ratio, and that continues out where we're at, even going farther to the west. So it's pretty consistent in that sense.
Okay. I think that's all about it. That's all I got for the moment. Thanks a lot.
Thank you, Michael. Appreciate your questions. Scott, do we have questions from the audience that you'd like to ask now? Wait a minute, we've got Murray Vanderbilt. Murray, you're on, right?
Sorry, I didn't have the mic on before. You got me?
Yep, we got you.
I might have missed it because I had to duck out for a minute, and I can't find on site just the financials. Can you tell me the cash on hand now and your burn rate?
Yeah, well, our burn rate keeps getting bigger and bigger because we keep connecting and connecting. So, I mean, obviously, success begets success. We've raised $12 million since June. We only set out to raise about $4.5 million, but you never say no to a good thing. This should take us through the end of the year. Probably cash on hand. I mean, I'd say 6 or 7. I mean, we keep ramping up, right? So we've got we started with 1 rig, then 2, now 3. We're drilling Silver Cloud this month as well for a 3,500 meter program. But what's nice about this is the fact that literally every single warrant we have for the company, aside from the August financing, is well in the money, and that's going to bring in another $6 to $7 million to the treasury. Now, I should say something through warrants. Now, I should say there's a caveat there. The caveat is that there is no forced conversion on the warrants, meaning you're not going to have to, we're not going to call them at one time, and it's not like there's going to be a wall of stock that we're going to have to eat through at any one moment, you know, for the period of a month. You know, should every single warrant in the company get called in the next 2 years, all of them only have a 2-year strike from the date of issuance. Then that would bring another $12 million. We're in a position where, as we scale up, yeah, you know, everyone and their son's throwing us money. I mean, we have one of the best discoveries of 2020, and this is probably going to be something that's going to have legs through all of next year and the year after, until hopefully Blackrock's not a thing. But in the interim, we're in a position where we don't have to raise money. We'll get to, and we'll decide who gets to owner stock and who doesn't. So yeah, we're not looking at doing anything in the short term. Certainly we don't need to, but we're going to have a hell of a lot of drilling in the short term.
And the cost to drill now in Nevada, I mean, obviously it's a better place than northern BC or the Arctic or something, but I guess with all the activity, the cost has gone up for drilling now.
Bill, what would you say? We're doing like $25 a foot for RC. I mean, this is unheard of. Yeah.
Yeah, the RC costs are between $20 and $25 a foot.
Okay,
Insane.
terrific.
Yeah.
Thank you very much.
Yeah, you bet.
And I'm right, you get 20.
Hello?
Murray?
Sorry about that, Maria. I accidentally
Yeah,
cut you
you
off.
got roughly 24 million warrants, according to, I did find some financials here.
Yeah, probably 24 million warrants thereabouts, and who knows about the options. I mean, you know, Bill and I aren't going anywhere, so we won't see much of those. But the warrants, yeah, we got a whole bunch. But once again, there's no forced conversion provisions on those. So, you know, I think the first tranche to expire, you know, the first wall we might see is in June of next year, and that was from 16-cent financing, but we've seen a lot of those come in too. So, I mean, you've got a long lead. You're not going to have a huge overhang that's forced at anytime soon.
Okay, great. Thanks very much. Interesting story.
Thanks for being on the call, Murray. Scott, we're going to turn over to any questions. Good time to do
Sure.
that.
Yeah, let's see here. Some of them have already been answered. First question, is there any issue at Silver Cloud with old mercury liabilities?
So some people would like some of our feed. Bill, why don't you take that?
Yeah, I don't really believe so. I mean, there's some old calcine piles there, but you know, if the project were to go forward, all of that stuff would just go away.
It's just a really great indication that you're on top of a really, really active hot spring system, which, you know, the mercury bubbles up to the top, and the precious metals hopefully bubble out in the boiling zone range, a little bit below that range. So having silica, which is the center, and having the mercury expressed at surface, that's just a visual representation that you're on top of a system that's wildly active. Think Yellowstone National Park or something. But, you know, we're in the richest gold mining area in North America, certainly, probably the world. And this is a property that hasn't seen any drilling in nearly 20 years. You know, Bill had the last discovery on the property in 2002. when he was with Placer Dome. In fact, Silver Cloud's the reason why he joined the company, and it's also the reason why I joined the company. I thought this had to be the most overlooked exploration asset in the business, certainly Nevada. It's certainly the next logical discovery. If we can keep finding the, there's so much smoke up there, we just need to find the source of that, and that's what we're doing. This is a 3,500 meter program. We're doing RC so we can do it cheap, but we've got 14 drill holes. To put it in perspective, we drilled 6 drill holes in all of last year. We've connected on 250 meters of strike in one area. We're going to try and extend that to 350 on one of our first holes on this program. And that area's got grades up to 12.5 grams per ton. But it's this northeast veins target, the target that's directly adjacent to Hollister, what was the second highest grade gold mine on the planet a few years ago in operation. That's exciting. I know Hecla, who owns the property all around us, we're the donut hole in their clay map. They're going to be spending a significant amount of money on that area. Phil Baker, their CEO, says they're looking for new discoveries targeting an ounce per ton, because that's what the area is for. That's what we're looking for. We're looking for ounce per ton discoveries.
Thank you. Next question would be, have you used Australian style lineaments in finding the veins like Estodriscoll, mapped in Australia, the locator of the Olympic Dam deposit?
Well, we haven't used linears, from various sources, but really what we're using here is gold and silver from the old timers in underground workings.
Okay.
Well, we've had to do very little in the way of targeting because, we don't need, as Bill said, it's not a clean sheet of paper. We don't need to look at water runoffs or soil samples or geochem or geophysics. We literally just pointed the drills right where they stop mining these things. We've extrapolated, and yeah, we've connected at a wildly successful rate. Now, once we start connecting on the step outs, that's where the rubber hits the road. But that's sort of what I guess the purpose of this call is, because that's what you'll be investing in.
Thank you. And next question is, what are the terms of the Sprott financing? You may have already gone over that, but.
Yeah, he invested, so he wrote a $5 million check personally at 70 cents. It was right after we hit. Before that, the week before we hit on that, we did a webinar with you. I think we were trading at 40 cents. Obviously, the stock moved. He bought 70-cent financing with $1 warrants. Those are good for 2 years. Sorry, $1.50 warrants. We've never had to put out more than a half warrant, and I think our cost of capital is only going to go down from here on in. But he's he's probably the biggest silver bug on the planet, and as jurisdictions goes, it doesn't get any better than Tonopah.
Thank you. And another question, just to summarize something you may have already delivered early: how many meters drilled to date, and of that, how many results have you received?
Yeah, so to date, we've drilled about 40,000 feet, I believe, somewhere in there. And we've in basically 28 drill holes, and we've received results for, well, you'll see some more results here, but 20 of those 28.
So we've released 10 drill holes so far. We'll be releasing about another 10 very shortly. So place your bet.
Great, thank you. That's all the questions we have from the audience at the moment.
Thank you, Scott. Very informative. I'm going to turn the call back to Andrew and Bill for closing remarks.
Listen, no, it's great to be back here. I appreciate it. Some very insightful questions. Once again, when I was brought this opportunity by Bill back in January, I didn't believe it. How could there be a mining museum right next to a property in the heart of the Walker Lane district, in a town where mining engineers and geologists have been staying for God knows how long? You've had some of the most notable entrepreneurs of generations gone past, from Charles Schwab to Howard Hughes came and owned the district as much as he could in the 60s, and no one thought to drill a drill hole into the historic workings. Well, it's playing out as Bill said it would, and it's been an incredible ride. You know, once again, we're planning that Silver Cloud's a hell of a standalone asset. It was a standalone asset when Bill and I joined the company. We think this is one of the best exploration, grassroots exploration properties in all of Nevada. It was able to get both of us here and behind the story. This time last year, Blackrock, with just Silver Cloud, had a market cap of about $25 million. And now none of our market cap is behind Silver Cloud. It's all because of Tonopah. Well, we're only stepping up the gas on Tonopah, and we're planning on stepping on Silver Cloud very, very shortly. But in the interim, you know, anyone that wants to participate in us as a management team gets to have both. And yeah, so far it's been a wild ride. But as I said, you know, with some of the comparables out there, if you look at grades and you look at just total resources and expectations, the only comparable on the planet that I see right now with us is Silvercrest. And, you know, they're $1.4 billion market cap. So I don't know if this is the beginning or the end. I can say that we've hit at a high rate, and we've, you know, 2 months ago, Bill and I were both here and we told you what we expected to hit. We've hit it. And now we're focused on just how big this can be. If we're anywhere close to right, then yeah, I can tell you my mother's in the stock, my brother's in the stock, and certainly all of my net worth is in here, and honestly, I'm sleeping like a baby. So I hope you join us for the ride.
Thank you, Andrew. Thank you, Bill. Very well presented, gentlemen, and greatly appreciated. I want to thank everyone for joining us today. Your attendance is always greatly appreciated, never taken for granted. And we look forward to some of your feedback that we can report back to management. Thanks again for everyone for your presence. Be well, Andrew and Bill. Take good care.
Thank you.